We'll discuss influences on the market and what exactly moves financial markets, the idea and concept of market sentiment, how emotions can impact a financial instrument in terms of valuation, the impact of social media and the effects to look out for when investing, and institutional versus retail investors. So let's start off with influences on the market. A major cause of the cryptocurrency market's volatility is the effect that the media has on market sentiment. Volatility refers to a market or an asset's price fluctuation. And we can determine this by asking a few questions such as, is the price movement predictable and in small increments, or does the asset move in larger price swings? If the asset moves in very large price swings that are unpredictable, we can consider that asset to be volatile. Market sentiment is the overall attitude of investors towards a specific market or project. Now, positive news or announcements can have a positive effect on the overall market. This can promote confidence in investors and increase crypto demand, resulting in an increase in coin prices. To counter that, negative news, or what is commonly referred to as FUD, which is an acronym for fear, uncertainty, and doubt, can have negative effects on the overall market, where investor confidence in the market decreases, resulting in the possible increase in sales and possible decrease in price as the demand for the asset lowers. If people are scared or they hear bad news, they don't want anything to do with it. Now, retail versus institutional investments. Retail investors, which we can consider as non-professional investors or traders, have comprised the majority of cryptocurrency purchases for much of its history. Institutional investments, purchases from professional investing groups and corporations, businesses, have began to increase during the 2020 bull run and have continued into 2021. Some examples of institutional investments are purchases from companies such as MicroStrategy, Square, Grayscale, Tesla, MassMutual, and even PayPal. These publicized investments generally have had a positive effect on overall market sentiment and can lead to price increases as investors believe in the support developed from the larger investments. Retail investors can often see large companies such as PayPal or Tesla buying and investing in Bitcoin as a sign that the asset is worthwhile and there is a strong sign of investor confidence. Now let's talk about one of the first initial institutional purchases of Bitcoin, and that would start off with MicroStrategy and Michael Saylor. So MicroStrategy is a publicly traded tech company that's based in the US. They offer business intelligence software, mobile software, and cloud-based services. Michael Saylor, the CEO of MicroStrategy, announced the company's first purchase of Bitcoin on August 11th, 2020. The total purchase was 21,454 Bitcoin for about $250 million. Subsequent purchases has resulted in MicroStrategy owning about 105,000 Bitcoin as of June 2021. Their total purchases amount to about $2.7 billion at an average price of $26,000 per Bitcoin, including transaction fees. Now, this was seen as a very significant event in cryptocurrency history. This purchase was seen as one of, if not the first large purchase of Bitcoin by an institution or corporation. And this has not only affected overall retail investor sentiment and confidence positively, but has also led the way for other institutional purchases. following MicroStrategy's purchase of Bitcoin, they actually held an event called their Bitcoin conference. Now, on February 3rd and 4th, 2021, MicroStrategy hosted a massive virtual Bitcoin conference to discuss the Bitcoin for Corporations program led by the company's CEO, Michael Saylor. According to MicroStrategy, the event attracted over 8,000 participants from 6,917 different businesses. This event served as a major catalyst for institutional adoption of cryptocurrency, as the asset had not been presented in such a large formal setting before. Before this, it was typically retail traders, and you would hear talk and discussion of it on online internet forums, but to have it in such a formal setting was really unheard of before this. All sessions of the conference are available on the MicroStrategy website for anyone to view, so if you're interested in that, feel free to check that out. It's definitely informative. And we're going to show some images that document details from the event and the resulting price action of Bitcoin. What kind of effect did this conference had on the price of Bitcoin? So here's Michael Saylor. This was live streamed. As you could see, there was over 20,000 views at the time. This was on February 4th, 2021. And here's their overview of their Bitcoin corporate strategy in operation. Now, as part of their strategy that they hope to deliver to various organizations, they're stating that Bitcoin can be integrated into the P&L, which is a profit and loss log of expenditures and the company's profits, the company's losses, as well as the balance sheet of corporations. And they had various strategies such as their Bitcoin treasury strategy, the product strategy, a service strategy, Bitcoin for competitive advantage, Bitcoin to avoid solvency challenges, examples of corporations that successfully integrated Bitcoin, and future opportunities and competitive dynamics. Now, this was really seen as revolutionary in the Bitcoin space because before this, there weren't really any large-scale major institutions purchasing Bitcoin as we see here, and really not only purchasing it, but really laying out their strategy and the intent behind the purchases itself. Here's another example of the conference where Michael Saylor is seen here, and he's speaking with Ross Stevens on the right. Ross Stevens was the founder and CEO of Stoneridge, and also the founder and executive chairman of New York DIG, which is the New York Digital Investment Group, another major investing group in the cryptocurrency space. And here they're talking about their macro strategy, their long-term projections, and the bigger picture behind investing in Bitcoin, where they see Bitcoin as an investment-grade, safe haven treasury reserve asset, and one that is actually superior to gold. They say that Bitcoin is the solution to the store of value problem faced by all corporations and their customers. And in that particular session, they discuss Bitcoin as the emerging dominant monetary network, pros and cons of other assets as a treasury reserve, most likely discussing gold and how Bitcoin compares to gold, the macro economic outlook for the coming 4 years. That most likely had a lot of discussion on the fairly loose monetary policies that were adopted worldwide as a result of the coronavirus pandemic and also the fear of inflation. They also discussed the history of Bitcoin and the structure of the crypto industry at the time. Now, to say, it is important to understand that this was done in 2021 February. A lot has changed since then, and more structure and more formalities in the crypto industry have come, which is not necessarily a bad thing. It's just that the industry has matured since then. And they also discuss critical developments this year and the outlook for next year. Now let's take a look at the resulting outcome of these particular events. This is widely publicized in cryptocurrency circles, YouTube ads, discussion boards. So here we see on day one of the MicroStrategy conference, about Wednesday, February 3rd, we see the price of Bitcoin about 37,000, maybe just under, somewhere between 36 and 37,000. And we see a rather dramatic effect resulting from the conference. So this is February 3rd. By February 5th, we see Bitcoin reached a high of 38,000. And by the 7th and the 9th, Bitcoin broke and reached all-time highs at that time of well over 40,000. So within a week, we saw Bitcoin go from mid 30,000 to reach 46,000. Another major impact in social media spaces and a major impact on the cryptocurrency space is the Elon effect. So Elon Musk, CEO of Tesla, has become increasingly more and more involved in the crypto social media space in the year 2021. On January 29th, 2021, we saw Musk change his personal Twitter bio to #Bitcoin. This caused the price to surge throughout the day from a low of 31,000 to a high of 38,000, which was a near 20% increase. We see another event as well on February 8th, 2021, where the famous car company Tesla announced that it had actually purchased $1.5 billion worth of Bitcoin. As a result, the price of Bitcoin surged from 38,000 to a high of 46,000 in 24 hours, a 22% increase. Here are some charts visualizing this dramatic increase in valuation. So we see on January 29th, 2021, Musk changed his Twitter bio to #Bitcoin. And we see a resulting very dramatic price increase right here. And this was spoken about in traditional news sectors, all over Twitter, YouTube, other social media. Essentially, this was a shakeup in the crypto space. We see the resulting uptrend as we see the increase in prices. This could be attributed to not only Musk, but maybe also Michael Saylor and MicroStrategy. And then we see on February 8th, maybe a little over a week after Musk changed his Twitter bio, Tesla announced that it had officially purchased $1.5 billion worth of Bitcoin. Now, continuing on with the Elon effect. So, although many of Musk's statements generally have had positive effects on the overall cryptocurrency market, there are downsides to one figure having so much say in the field. On May 12th, 2021, Musk tweeted that Tesla will no longer accept Bitcoin payments. One of his reasonings was him highlighting the overall energy consumption inefficiencies of Bitcoin mining and how many of the established Bitcoin mining facilities use pollutants and certain fossil fuels that would pollute the world and pollute the earth. And Tesla, being an electric car company, would want to promote green energies and renewables. Now, on that day, the price of Bitcoin fell from a high of 58,000 to a low of 48,000, which is about a 16.5% decrease. Now, while the resulting downtrend could be attributed to a number of factors, on May 16th, Musk continued to add fuel to the fire by replying to a tweet suggesting that Tesla may have sold its Bitcoin holdings. On that day, Bitcoin fell from a high of 49,000, almost 50,000 at that point, to a low of 43,000 low, which was about a 12% decrease just on a single day. And here are these tweets just for documentation purposes. So here's a tweet from Elon and Tesla discussing how Tesla has suspended vehicle purchases using Bitcoin. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels, and we believe it to have a promising future, but this cannot come at a great cost to the environment. We also see on the right where a certain user, Crypto Whale, essentially assuming that Bitcoiners are going to slap themselves next quarter when they find out Tesla has dumped the rest of their Bitcoin holdings. And Elon essentially just saying, indeed. Now that's just essentially just kind of adding fuel on the fire, speculative claim that Elon would sell, even though Tesla stated that they will not be selling any Bitcoin and they intend to use it for transactions as soon as possible. And then to clarify, literally a day later, we see on May 17th, to clarify speculation, Tesla has not sold any Bitcoin. So let's see what kind of effect these statements have had on the market. So we see on May 12th, this is when Musk tweeted that Tesla will no longer accept Bitcoin payments. As we see here, this was about a peak, about just under 58,000, and the resulting drop to maybe a low of 48,000. Fairly dramatic. 4 days later, Musk suggested that Tesla may have sold its Bitcoin holdings in a tweet, further driving the prices down. Then finally, Musk tweets that Tesla has not sold. And as we see on the 17th, the price actually rebounded off of about the 43,000 level and came back up to 46. Ultimately, the downtrend would continue. Now, what's interesting about these social media effects and these news announcements is that sometimes they're not always truthful. Because in June 2021, we see Tesla's Q2 2021 financial report. And we also see that their digital assets remain the same. They purchased a certain amount of Bitcoin and they still hold it. We also see here the purchases of digital assets. They have it recorded, and this is from their publicly released financial report for their Q2 financial results. We see that they had a purchase of digital assets, and they also had a listing of proceeds from sales of digital assets. And that goes to further the claims that Elon sold a little bit of their holdings to prove liquidity, to prove that we could easily convert the Bitcoin that they would receive for car transactions and car payments. They can convert that to US dollars, and that could be done to maybe possibly appease state shareholders or any other officials in the company. And we also see in terms of profitability at the bottom where they have listed a Bitcoin related impairment of 23 million and other items. And that could be as resulting to the price of Bitcoin falling